Good morning and welcome back to the Opportunistic Trader for August 31st, Friday. I'm joined by my partner in crime, Vince. And
Thank you. Good morning, Larry.
good morning. And
No gold talk, no VIX talk today. Okay.
no VIX. We're done with VIX for today. We're giving it a rest for the weekend, for the
All
holiday
right.
weekend. I wish everybody a good holiday weekend. We got a interesting day on tap so far in the markets. We expect it to be a little bit quiet, especially later in the day, but there's obviously a lot of news swirling around across the world. I want to, do our regular talk about yesterday. Yesterday had a few trades in oil. We did okay, small scalps, I think two of them, and then we covered our short S&P for a small profit, which, for us, we were lucky. Looking at it now, we were not lucky. We probably should have stayed short, but for the time, for where it went, we were happy to get it back, and it was just bad location, but we made a little bit of money on that. And looking across the board today, in Asia, markets were slightly lower. Hang Seng down about 1%. Nikkei down 20 basis points. Looking at Europe, the DAX rallied back. It was, we talked about it a little bit in the morning yesterday, but it was down 50, then it was down 150, and then down 50, and then today it went back down, took out the lows, down about 100 and some change. Looking weak overall. Our markets are down slightly. S&P is down 550, $7 under fair value. Looking at NASDAQ, that's holding up better. Apple's up small, and Amazon is holding nicely above 2,000. In oil, we came in short crude, and we were lucky enough this morning to have it trade down, covered near the lows, and then now oil is back to flat on the day. Looks extremely strong. I don't know if it's Iranian news or what's going on, but that market's trading very, very strong at this point. On the it's on a 6-week high. Going across the board, the currencies, not a lot of movement there. Dollar slightly stronger. They're looking, I guess, which I'd like to discuss today. And I know, Vince, we were talking before we came on air about NAFTA and the deal and the timing and what's going on. And, I want to fill everybody in that's listening to us about really what that is. Going across the board to the straddle, which is the VIX, which we said we wouldn't talk about, but is bid up as it's almost 15 in September as far as the SEP futures. So we're expecting.
Yeah, people should know that's not spot. That's the volatility or VIX futures that really we think matters if you're assessing volatility.
Well, that's the tradable instrument.
Right.
The other
the spot is like 13 and a half or something like that.
The other instrument's not tradable. So, the straddles are bid pretty strongly. It's pricing in about $10 on a what's supposed to be a quiet pre-holiday, so that's pretty high. And we're going to look to do something there today. We're closing the month. Here at the Opportunistic Trader, it was a good trading month. We put my trades up on the board, and I don't know what the final number is, but I think we did pretty well. I don't know the percentages, but it's been a good month, and overall, happy to get into a more volatile month. We talked about next month, people back from vacation, and a lot of stuff cooking out there. Yesterday's high in S&P was around 29.16. and a half. So I guess that's the high for now. I don't know if that'll be the all-time high or the high for just the day. That we don't know. But should be some decent trades today and some trading. So I wanted to throw it to you for your assessment of overnight and thoughts on NAFTA and thoughts on any kind of news that may be market moving today.
Sure, Larry, thanks. You covered overnight, I think, pretty much as it was. I think the only thing worth noting is that Erdogan was speaking a few minutes ago, and we had a little whip in the Turkish lira. Went as low as or strengthened under 6.4, and now is in the 6.56 area as he was, talking. The Canadian dollar had like a nice little move right after Canada said we don't think we're going to be doing any deal by Friday. They weren't being aggressive. They were just saying we're not sure that'll happen by Friday, and the Canadian dollar softened on that against the U.S. dollar. Other than that, I would just add to the trades that to the trading commentary you made about your month. To be 50-50 on trades, if you're risking one and making two, is fine. To have a winning month on volume of trades while you're risking one making two is, really good. So, just keep that in mind when you're looking at trades. That's it's the risk management and the VAR that matter on each trade too. So I think it's been a very good month.
Yeah,
I think I'm 5-5, and it was an up month for me. So that's an idea.
Wow. Yeah, I'm kind of a little different in a way though. I'm never doing a 2-for-1 type of deal. I'm more of a scalper. The bottom line is, we're looking to make money, and we manage our positions basis the P&L. So.
Well, I do that too. I just can't do that with this system. And the reason I don't do that anymore is because my subjectivity gets in the way of my own trading. When I look at, I think the market is imbalanced here, and I'll let my losses run that way. So you have a different discipline, and that is, it may be, you may risk two to make one, and you'll make the one 80% of the time because you see the short-term asymmetry in the market, the imbalances.
Yeah.
For me, as an options guy, I can't get away with that because I don't have my finger on the pulse like you do. I'm much more, bad with my own emotions, so I have to use quantitative protections.
Everybody uses their own disciplines, and obviously in here by being with us, I will be going over all of that and showing you sort of what I do. And basically, every trade that we show is. We utilize a stop in there just to protect, on the upside or the downside. We generally, I would say, 75 to 80% of the time don't, reach the stop level before we exit a losing trade.
Right.
It's
different between. I mean, you have so many. When you trade that way, and I do trade that way in options. It's basically flow trading. It's you don't have to, you have a stop in your mind, and you're looking at so many different factors influencing the moment. That's why it's not a black box. Black boxes end up being robots, and people, I think, end up treating them like brokers, and that's probably what you're taking advantage of right now, the inflexibility of robots.
Yeah. I mean, listen, the robots run the show, so I can't really say much about that. But what we try to look at is, correlation trading, markets that are strong against other markets, a lot of mean reversion around that as well. And, the best markets for me to do that in are, have been crude oil and S&P, and S&P is running a distant second at this point to crude. Crude's, for, traders is probably one of the best trades on the board as far as pure movement on a daily basis, especially on a percentage basis. So,
true. It just tops.
Yeah, it just moves, and it's all over the board. S&P sort of gets one directional and moves that one direction for days. It's funny. I was looking as I was coming in this morning, and the S&P until yesterday had 4 up days in a row. And those 4 up days were pretty extreme, and then all of a sudden they turned the computer off, and at lower levels, there are no buyers. So, it's interesting, to look at all the, the different markets. To me, and it's your favorite market. Gold is really a trendy market. Like it'll it doesn't really move and then it'll go.
Yeah.
I was pretty heavily involved in gold at the 1350 level earlier.
Right. It was continuous. It was flowing, and it was tradable.
Yeah. And then all of a sudden, the market went for sale, and the market basically, I wouldn't say died, but got crushed day after day after day. And like, it's funny, now we found a level in here at, I guess, 1200 for now. That we're gonna play ball at for a while. So
it's kind of like, I think I wrote this in a post before. There really has been no trading once it started coming off at 1350. You were either just short and sat on your hands, or you got chopped up on the way down. But now we're at an area, as you're saying, that might be tradable. Like, for example, yesterday I had a sell signal. Cost me $1.50. I was wrong, but I'll blame the signal, right? The sell signal was wrong, but it was risk one to make two. So, but I'm getting signals now. Like on the way down, I didn't get a signal. I just got a sorry, it's just going to keep going in one direction, and I can't punt that way when I'm speccing. So yeah, you're right. It's tradable now.
Yeah, no, it just looks interesting, and then the market that's very different is the currency market, which I've traded, but I'm not a professional, and watching Greg trade those markets is pretty impressive to me. And they're really mostly news-driven markets where they react to the news or the flavor of that moment. Like we were looking this morning, we were actually talking before we came on air, and they're going back and forth with NAFTA, and which I want to discuss, and they need to sign that deal basically today because the president of Mexico is sort of out after today, and they had some headlines that they don't think they are going to sign it today, but who knows if that's posturing or whatever. But on a comment like that on the Canadian dollar, you get 30-40 pips pretty quickly, and if you're really quick on the news and you're able to see it, you could make a lot of money. And I think that's what Greg is really, really good at, is being able to react to the news, understand it, and see how to frequent in those markets to make money fairly quickly. You get the news, you get in, and then you get out. So I watch him trade, and it's pretty interesting. But it's funny how all these markets, in a way, are a bit different. S&P is, for the most part, it used to not be like this. S&P used to be like crude oil is today. S&P, I used to trade it with a buddy of mine every day. They call him Trader X, but Trader X, we would trade 50 times a day, in and out of markets, capturing big movement. And the scary thing about S&P really at this point is it's a $3,000 instrument for the most part. So like people freak out trading Amazon. They're like, oh my God, Amazon's 2,000. Well, the S&P is 3,000 almost.
Right.
So it's really it's a big bad beast. But what's going to happen, and I think you'll see it hit later in the year, is if you do have a 1 to 3% correction, you're talking about 100 figures. You're talking about you're talking about 100 handles. For a 3% move, that's nothing.
And I think you're going to see, like not necessarily as bad as the flash crash, but I think because of all the algorithmic liquidity that basically leans on orders beneath it and above it, when we do get that 3% move, you will not have a market maker of last resort or a trader who's stepping into cover, because algos only make liquidity in markets when it's convenient for them. So you're not going to be able to get out. It's going to be a roach motel when that happens, I think.
I don't know. You know what? To me, that's a debatable point, because because the one thing I'll tell you, and people
It could
that,
be higher too. I'm just saying, liquidity is
no,
interesting.
but I think in 2009, 2008, when we had the financial crisis and things were a disaster, markets were moving amazing, okay, but
Right.
there was liquidity almost at every level. I mean, I would say to you that it was so efficient that it was almost scary. So, I mean, I'm not saying we can't have pockets of drops, but there's just so much liquidity out there that I don't see.
That's my own bias towards fat tails. I'm always long tails in options, so I think that way. And I'm referring more to the algorithmic post crisis, flash crash type of stuff. But yeah, I do. You're right. I mean, there was a lot of liquidity at levels, but
No,
I
I
think
just listen again. Every time is different. I stood on the floor in '87, and in '87 there was zero liquidity, and I mean, I guess because that was the first time in many people's lifetime, because at that point most people were not around for the 1929 fiasco crash.
right.
That maybe some guys were. There were some guys on the floor that were 75, 80. So maybe they could have been there for the first one. But what happened in that was really, it was kind of caused in a way by insurance and protection and
Right.
options and short options and but what happened was people were paying to buy back options at like a 400 volatility, where they were buying back options that were basically valuing the indexes at zero. Like,
Right.
if you had like a 600 put, like that you were short, they were paying $580 to buy it back, and
Right.
it could
And that was
always,
just as indices were created too. So everyone thought, oh, I'll just sell the index if stocks go down. Like portfolio insurance was not buying puts and selling calls than it was. Well, the lower it goes, the more I'll sell. It's kind of like negative gamma. I don't want to get out of my long IBM. I'll just sell more indexes. And okay, that doesn't work.
right, but that, I mean, I stood there that day. That was amazing. But I think there's efficiencies in the market. It's all computerized. People can see bids and offers, not that they're real, because all of the stuff can fade very quickly before you can
Right.
hit
The market's
bid.
more mature.
But well, the market's just more liquid, and there's so much more going on. But overall, we're gonna play, or put positions on that take advantage of a long volatility bias coming into the end of the year. I think there's a lot of headwinds above, but again, the market is amazing, and like it takes really, really bad news to move the market lower. And the thing is, like today, now they've put in everybody's mind that the NAFTA deal probably won't be signed. But if it is signed, then maybe we rally 20 handles or 10 handles or whatever it is off of that. So, I'm a little leery of that. I'm going to watch that all day. Obviously, we're into month end. Interesting, I guess I would call it fact. But the market in a good month generally comes for sale at the end of the month, like yesterday and potentially today. And it's really strange to me, because it just seems like, I guess it's what we talked about with the weighting of securities. And if you have a position in Apple, your position is worth so much more money because Apple's gone up so much. You've got to cut the weighting of the stock. So
Right.
you need to sell shares. So maybe that's a lot of it. Markets had a good month again, overall, and we're coming into the holiday. We expect it to be quiet, and we'll be watching news events. I think it's a news event day. I was watching
That's
oil.
true.
I was watching oil this morning. It was bidless, had no bid. It traded down. We covered down there. Our short, we didn't get a lot in it, but we're happy that we got it back. And now the thing trades above $70 again, which is, believe it or not, a 6.5 week high. The market literally sold off for 5 weeks points, and in 1 or 2 weeks it took it all back. What's weird is that oil is on the highs, and S&P, is on the high but off yesterday's high. So, we'll see if there's any correlation there. And gold is bid 5 higher. I don't know if you have any thoughts on that market.
Briefly, I think it can be summed up in 2 statements. The first one is, again, gold hates the teens. So you'll see that it's bouncing around from the low teens to the 03 area. Yesterday, I got a signal to sell when the market broke 1205, and looking for it to on the volatility signal, looking for a penetration of 1198 and then a washout. We never got to my level. It held strongly in the 1201 area, and then of course after I was stopped out, it rallied up to the low 1210, 1212, 1213 area. So you want to be, if you're playing the range, it's like look to fade the teens below 15. And look to buy above 1,200. I don't think I'm going to get anything in the metal side at all today.
Nah, it looks quiet. Currencies actually look quiet. I'm looking at the euro against the dollar. Dollar slightly stronger by 14 pips, and the yen is doing its thing. And I guess the big mover is Canada back above 130. I think
the fact that we're talking about Canada is a big mover, I think.
Yeah. Listen, I actually watched that currency. It's a good trader,
It is a good trader. I wanted to circle back to one thing that you said before and try and parallel it with our currency guys. Our equity guys who really know what they're talking about. And I want to try and parallel what Greg does with what the equities guys do, especially the FAANG guys in our community. And then, I know you want to talk about NAFTA, but if you would permit me, I would just want to make a comment about Greg's approach versus, say, rotating in and out of FANGs. Is that okay?
Yeah, for sure.
Okay, cool. When you, Larry, talk about Greg capturing moves in the FX market, what I see, and you'd be better off asking him. Maybe people should be asking him this in the chat. Is that, the FX markets are efficient, the FX markets are deep, but what the FX markets present an opportunity is when the primary currency moves. So, for example, the Canadian dollar moves, he will then know how it trickles out or how it flows out. So you'll see things like, emerging markets are strong, I'm going to buy Mexico and sell Brazil, something like that. He'll go with he sees how it rolls out. So it's really very similar for the equity guys out there to someone saying, hey, good news on Google. Google's strong. I'm going to buy, Netflix because there's kind of a correlation or tracking with it. So, for example, if emerging markets are getting beat up, you'll see Greg from time to time say, Italy's more of an emerging market. And he won't say this is me talking. Italy should be a little bit lower if Latin America is getting hammered. Why isn't it? So maybe, I'm not saying he would, but he'll see a correlation here. So, for example, the Canadian dollar is weaker today. There may be a different pair that he wants to trade against that. So I think the equity guys should look at that and parallel it with their own type of trading. How it trickles out, I think, is very relevant to paralleling it with, rotating within and out of techs based on news in another tech, for what it's worth.
Yeah, I think you could utilize that in pretty much all markets.
Except gold.
Well, gold is gold.
Are you bullish gold? Buy S&Ps.
Gold gets a lot too much hype on our site. It's a hard thing to make money in.
All right, so let's talk NAFTA then. Okay, you beat me up over that. Okay, gold is a doorstop. I'm sorry. Let's talk about NAFTA then.
Well, obviously, we touched on it a little bit. I guess that's the news of the day. Trump, I guess, was out tweeting, hedging that there may not be a deal, even though 2 days ago he said there was going to be a deal. So, keep an eye on that. I expect that they should try to do a deal today. It would make a lot of sense. My thought is, why is the finance minister of Canada running down here to talk to us if they're not really looking to do something. But again, they could walk away, which I don't think would be smart for them. But
Right.
you don't want to mess with Trump, right? I mean,
Well,
he'll put
yeah,
he'll put.
I don't know. I mean,
I feel like
I
it's Dr. Evil from Austin Powers when he said, rather than he was saying 1 billion, he said 1
right,
million.
right,
It's
sir.
like Trump will put a $200 billion tariff on Canada, and they'll like tap him on the shoulder, and they'll be like, "Listen, they don't even do that
Right.
kind of business with us. We can't put those tariffs on." So I
That
just think they're. It's all buzzwords for him. He
right.
likes 200 billion for now. Talking
Is he
about
not a
trying.
trader, Larry? And I say this in a complimentary fashion. I see him as a guy who's constantly trying to bluff pots. There's a deadline coming up, but it's not really a deadline. But he'll bluff, and if you blink, he'll take the pot. That's kind of what I see him with his rhetoric.
Yeah, I think his rhetoric is insane. I mean, yesterday he was talking about how rich everyone was getting in the stock market. Last week he's like, if I get impeached, people are going to be very poor. I mean, it's just mind blowing, but
I know.
it keeps everybody on their toes.
Yeah. For example, Donald, if you remember that, says many farmers he doesn't say it, but you could just see the whole like blurring of lines. Many farmers will be very happy. Well, how many is many, Mr. President? A lot. Well, how many is a lot, Mr. President? Many. Well, is it a majority? I don't know, but it's definitely a lot. He's kind of channeling Reagan when he does that stuff, selling it.
I don't know if I put him in Reagan's category, but we'll see how. We'll see how this whole thing ends in another.
I'm talking about
years.
his style, not his ability or success.
But yeah, so I think today is going to be quiet. Markets again are a tad bit lower. Nasdaq outperforming S&P. I see on our FANG board, Apple is up about $1.30. Apple actually has become a decent trader for people that trade out of our equity room. Yesterday, the stock dropped $3 or $3.50 out of air, so there was a lot of movement there. Could have capitalized and done well. Tom
put on some put spreads and trees, I think, so he might have done well as well.
Yeah, it probably worked out well. I mean, the stock bounced back. The high was at the low 128 handle, maybe 128 and a half. It's trading 126.35. Traded down to like almost unchanged on the day yesterday after being up $4.30, which really isn't that big a move, but 1.5%. But in Apple, I guess that's big. Facebook had a decent rally, about $2.50 to $3 yesterday. It's up about 5 cents in the pre-market. Netflix again was a little bit weaker yesterday, but it's funny. I'm looking at it's trading 370, traded down into the 310 area, bounced $60, which is a crazy good move. Amazon, the bellwether, is holding at 2009. Basically, in the sky. But what's interesting is yesterday on the high, it had about a $993 billion market cap. So I'm assuming that will be the next $1 trillion company, and we're making $1 trillion companies like water. So
right,
it leads me to be a little bit leery. Google up small. Overall quiet. Banks are a touch lower, very, very little bit lower. And it's interesting, the EM stuff where they were slightly lower last night, those markets are kind of unchanged today. So maybe it's pricing in a little bit of a bid relative to where it was, basis cash on the close on the overnight. So, we can keep an eye on that. I mean, that's been a good cue for markets in the U.S. or market trading for, day traders. It's interesting. The spool looks heavy. It was, they did a lot of volume around the 2900 area on the close, 2900, 2901. So all that volume especially on the buy side, didn't hold. So we'll see. We'll see where we open. Oil's trading at $70 a barrel. It's whipping. It just was 70.25. Now it's $70. It was 69.70 when I walked in. So
violently unchanged, I think, is the term that you're looking for.
yeah, but you're gonna catch 20-30 cent moves. You could catch 20-30 cent moves in there on air. So it's a good trader, and overall we'll keep an eye on things. We expect it to be quiet. We'll be back via audio a bunch of times, hopefully during the day with some news. Our schedule today is actually for a pre-holiday Friday is very full. I have Tony Greer joining us from TG Macro at 10 o'clock. He's our equity guy. He's really, really talented. I love to listen to what he's talking about, and what's nice is he has positions in the market, and he's talking his positions and potential positions that he's taking. And, I really enjoy that. And then at 11 o'clock is Ed Muir from the Commodity Group and Commodity Research Group. And he talks about deep fundamental research in different commodities. So I don't know exactly what he'll come on about today, but he'll be talking specific commodities. And then as always, on Friday, we're going to be joined at 11:30 by Mark Fisher, probably one of the best traders in the world, and his insights on understanding trading and managing risk and all of that is always a value add to hear. So we have Fish coming on at 11:30, and then at 12 o'clock, Bryn is on. She talks nat gas, electricity, and crude oil, and she provides a lot of technical and fundamental analysis in her presentations, and I'm looking forward to hearing from her at 12 o'clock. And then after that, the afternoon will be pretty slow, hopefully, and but I'll be around all day, and I'll be in the chat all day, as well as I think you. And that's it for me from here. I don't know if you have any final thoughts, but I should be back before the opening with some commentary.
Final thought. You touched on it indirectly. FANGs have Trump risk now with the antitrust comments he's starting to make out there. So the whole sector is susceptible to antitrust, monopolistic type of rhetoric coming out of Trump. That's the only thing I would add.
Okay. Well, listen, I will see you in the chat, and I wish everybody a great holiday, long weekend, and look forward to the start of September. And, we're going to hopefully close August on a positive note.
Cool.
All right. Everybody have a great day.